Hey guys, welcome back to my channel McNallie Money, home of all things stock, investment, and personal finance related. Now today's video, we're going to be taking a look at a company that I currently hold. It's actually my second largest holding overall in all my portfolios combined. They just reported phenomenal Q4 and year-end results last week. I wanted to get this video out sooner, but I had a little bit of technical difficulties. This is actually my second time filming the video, but I wanted to get it out and shed some light on this company because I honestly believe this is the most undervalued, under the radar stock in the entire small cap MJ industry, whether you're talking Canada or the United States. Now the name of the company is Tilt Holdings. I've been following this stock for a number of years, and I think it's a great opportunity at these current prices to take a look and potentially add this into your own portfolio. Now before we get into it, please take a second to like this video. It really does help my channel grow, and it helps get this content to other people like yourself who might find value. If you don't subscribe to my channel, feel free to do so, and as always, leave a comment in the section below on what you think of this analysis and how you feel Tilt stacks up to some of the other competitors in this space. Now without further ado, let's roll the intro clip and talk about Tilt Holdings. Okay guys, so as promised, today we're going to be talking about Tilt Holdings. Now for those of you who don't know, this is actually my second biggest holding overall in all of my portfolios combined. I currently have just over 18,000, so 18,125 shares to be exact, which is valued at around $11,000 to $12,000 Canadian, as the company is currently sitting at 63 cents. Now they traded flat today. If we zoom out to a 6-month chart, you can see that they have been in an uptrend. In mid-December, they hit a low of 30 cents. They then worked their way all the way up just under 90 cents. So they actually closed on February 10th at 89 cents. And since then, they've retreated a little bit and they're now sitting in that low 60s range. Now, I personally think this is a great spot to be buying this company, and anything in the low 60s, low 70s, I'm happy to pay for this company, and hopefully this video shows you guys why. Now, in terms of market cap, they're sitting just north of $200 million Canadian, and I should mention, Tilt does trade on the OTC exchange in the States as well. So on that side of things, they closed out the day at 50 cents and they're sitting just north of $162 million US in terms of market cap. Now the last couple of weeks have been crazy for people like myself who have a lot of their money in small cap penny stocks. It's been a really difficult couple of weeks, and I continually am seeing these companies, whether it's Tilt, Valens, WheatMD, Good Natured Products, very good food company. They're downtrending day after day. Today was pretty good. I saw green on a lot of the stocks that I own. But for me as a long-term investor, although the short-term pain is sometimes difficult to stomach, it truly is a blessing in disguise that you're able to acquire these companies for such a discounted rate and continually lower that average share cost on these positions. Now, for those of you who are new to investing, it can be very disheartening to see your overall account balance decreasing day after day. But trust me, if you're in this for the long run, these are the times you're going to look back at and wish you had continued to buy more and more shares. So I'm just slowly plugging away. Every time I've got a little bit of additional money, I'm putting it in my accounts, and I'm just continuing to buy these companies because I believe in the fundamentals and I believe in the long-term success of names like Tilt Holdings. Now I'm going to jump back to the Canadian listing here. So this one trades under ticker symbol TILT. And in terms of how this video is going to be laid out for you here today, guys, the main point of this video is to really talk about their year-end results. I'm going to go through their business model. I'm going to talk about some of the notable operational changes since my last review of this company about 2 months ago, but I'm really not going to talk a lot about operations. I'm going to focus on the results and ultimately comparing this company to others in the MJ space. So I've put together a spreadsheet towards the end of the video that's going to really illustrate why I believe Tilt is such an attractive buy right now and why I have such a high level of confidence in this company moving forward. I personally feel like this could be a multi-billion-dollar company within the next 3 to 5 years. So if you look at their market cap today, just north of 200 million Canadian, I feel like this easily could be a 5 to 10x stock over the next couple of years. And hopefully this video helps illustrate my bullish thesis and gets you guys to take a look at this company in a little bit more detail. Now, in terms of what Tilt Holdings actually does and their business model, we're not going to go into a lot of detail in this video. I actually put out a full analysis of Tilt Holdings about 2 months ago on this channel. So if you're looking for a more deep dive into company operations, please feel free to check that out. But as mentioned, the point of this video is really to talk about their year-end results and how they stack up versus some of the competitors in this space. But that being said, I did want to give just a quick summary of the 4 different components or subsidiaries of Tilt for those of you who may have missed that video. So the company is really broken out into 4 different pieces, being Jupiter, Standard Farms, Commonwealth Alternative Care, and Santa Vertez. Now, in terms of what each one of these divisions actually does, we'll jump over to the next slide here where it breaks it down in a little bit more detail. So Jupiter is really this company's bread and butter. Jupiter focuses on manufacturing vaporization technology, or essentially producing and selling vapes. Now, Jupiter has really set itself apart from others in this space by harnessing this C-cell technology. So they're actually the #1 distributor of C-cell technology in the vape space. And essentially what that means is really a more refined experience for the end user. And C-cell has really set itself apart as the premium product or premium technology in this space. Next up is Standard Farms. So this is actually their plant touching asset. And this really focuses on the cultivation, the growing, production, packaging of MJ related products. So they have a wide scope of product offerings, and we'll see some of the recent developments and acquisitions in this part of the company later in the presentation here. We then have Commonwealth, which focuses on the more natural medicinal MJ market. So again, they have a variety of products offered, but they really focus on providing MJ patients quality products, whether that's through wholesale or direct to patient transaction. And then finally is Santa Vertez. Now this wasn't discussed in my initial Tilt video, but this is actually their Canadian operation. It's located just north of Vancouver in Powell River, British Columbia, and this is really their base for processing and operations in Canada. So the goal here is to use this hub to really expand into the Canadian market in a meaningful way. Now, as a result of those 4 different subsidiaries, Tilt has the ability to really touch multiple areas of the MJ value chain, and that's broken out on this slide here. So on the right, you can see the different areas of interest that this company's identified. #1 is wholesale flower and CPG, or consumer packaged goods. So this is a space that we're seeing a lot of companies gradually move into or evolve into. In Tilt's situation, they have 2 subsidiaries that are focused on this quadrant, being Commonwealth on the medicinal side of things and Standard Farms on the recreational side. They then have product development, which is facilitated again through Commonwealth, Standard Farms, and their Jupiter division. Hardware and packaging. So again, all 3 subsidiaries, Commonwealth, Standard Farms, and Jupiter, operate in this space. And then finally is contract manufacturing. So this is some of the white labeling and the business-to-business operations or partnerships that Tilt has in place. And again, all 3, Commonwealth, Standard Farms, and Jupiter, operate in this quadrant. Now on the left here, you can see some bullet points that they call out. So contract manufacturing provides MJ brands with efficient access to limited license East Coast markets. We're going to talk about some of these select markets as we move through the presentation and their go-to-market speed that Tilt's been able to achieve. They then talk about their cultivation assets, which provide access to biomass for a lot of these CPG products that they're producing, especially in markets that are traditionally supply constrained. The third point here really focuses on Jupiter. So they talk about their robust inhalation supply chain, which eliminates fears of stockouts or failed products. And this was really true during the pandemic here. They were actually able to continue to deliver shipments and products of the Jupiter C-cell technology, even with all the supply chain issues going on globally. And a lot of their competitors who are actually forced to shut down or postpone deliveries based on those unforeseen circumstances. And then finally, custom hardware and packaging solutions, which allows brands to differentiate their products. So they actually work with other third-party providers in the MJ space to bring their products to market and to leverage a lot of the Tilt knowledge and expertise to their advantage. Now, I did want to take a second and just pause and talk about Mark Scatterday, the current CEO of Tilt. So Mark was actually intern CEO for a long time with this company. That was right when I started buying shares of Tilt. And what's interesting here here and what I wanted to mention was he was actually the CEO of Jupiter prior to joining the Tilt team. So as mentioned in my previous video, Jupiter is really the company backbone and the bread and butter in terms of revenue for this company. So the fact that Mark was able to build that brand into a leading provider of vaporization and inhalation technology in the MJ industry and managed to maintain control of this company after they evolved into Tilt Holdings is really encouraging to me as an investor because he knows the company from the ground up. He has the respect of the internal employees and he knows the company's business model inside and out. So I thought that was really important. And again, a lot of companies that have founders in the CEO position really seem to outperform others because you know that the person in charge deeply cares for the company and the success of the organization overall. So moving along here, now we're going to start talking about the fun stuff in this video, being the fiscal year 2020 year-end results. So this slide is almost a teaser. We're going to go through the full breakdown or the full report towards the end of the video here, but I wanted to give you guys 4 numbers to chew on as we go through the rest of the presentation. So the first up is Ebitda, which came in at 16.9 million. This is adjusted full year Ebitda. So take this with a grain of salt, you guys. A lot of companies in the MJ space have shifted to reporting adjusted Ebitda. This is not necessarily an apples to apples comparison between these companies, and there really are a lot of different ways that these numbers can be calculated. I've actually worked through the calculations for adjusted Ebitda on a lot of these companies that I follow, and they do differ drastically from company to company. Where I do think adjusted Ebitda is important is to compare the company to its own internal results. And if you do that, in this case, for 2019, Tilt reported an adjusted Ebitda loss of $800,000. So if we compare an $800,000 or just about $1 million loss last year to positive $17 million this year, you can definitely see the company is moving in the right direction. The next number here, and the most important number in my opinion of the entire presentation, is cash from operating activities. So this is essentially how much cash is coming in versus going out based on the day-to-day operations of the company. And this 34.2 million is actually the year-over-year improvement from 2019 to 2020. The next slide we're going to look at breaks down the 2 years individually, but again, this number really speaks to Mark's vision for the company and the ability of leadership to turn this company around in terms of their financial profile. The third point here is in relation to MJ revenue for 2020, and they actually saw a 41% year-over-year increase. Now, why this is important is because this company was traditionally focused on the Jupiter C-cell vaporizing technology, and that's where a lot of their revenues actually came from. So this number to me as an investor proves that they're starting to diversify their revenue streams and they're starting to get away from that single product or single vertical, which is great to see because it adds diversity and stability to the company, and it also gives them the opportunity to expand into a lot of new areas within the MJ space. And we're going to talk about their Ohio acquisition here in a couple seconds, but this is a great example of exactly how they're trying to do that. The fourth and final number on this slide is actually in regards to their cash expenses for 2020 compared to F19. And they were actually able to decrease their expenses by 30% year over year. Now, this is something we've seen in a lot of companies in this space. Over the last couple of years, MJ companies have been notorious for spending a lot of money, and we're seeing many of the companies that I talk about on this channel really take aggressive action to try and reduce these costs until they're able to become profitable. So I think, again, this speaks to Mark Scatterday's vision and dedication as CEO of this company. Now, this slide gives a little bit more color to the 2 figures we saw in the last, which were adjusted Ebitda and cash from operating activities. So on the adjusted Ebitda front, you can see a tremendous year-over-year improvement from that negative 800,000 to positive 16.9 million. However, the more interesting figure on this page for me is to the right here, which is the cash from operating activity. So you can see in 2019, they actually had negative 17.6 million. So almost $18 million of cash went out the door that wasn't coming in. Now in 2020, they flipped that metric on its head and they actually produced just about $17 million of additional cash from operations. So what that allows them to do is really internally fund growth or organically fund their growth moving forward. Now, as an investor, what that means is they're not going to have to raise money, do any more bought deals, and ultimately dilute their share count and earnings per share. And that's extremely exciting for me. I know I talk a lot about bought deals on this channel. They are very important to companies. Number one, to raise funds. And secondly, as an investor, it gives you a good indication of what fair market value is for that share price or that stock at any given point in time. But the downside is the more you do that, the more you're adding shares to your overall share count, which actually dilutes the value of the existing shares. And Tilt is one of very few companies in this space that is now producing positive cash flow from operations. And we're going to see that in their cash balance towards the end of the video. So this slide really calls out a lot of the top reasons that Tilt Holdings is able to achieve those great numbers we saw in Q4 and in F20 overall. So I'll call out some of the most notable ones here for you on the right. So they're the number one seller of C-cell vape technology across North America. They've currently got 700 plus customers, so very well diversified customer base. They currently have MJ cultivation and or processing in 3 different states, which we're going to look at in more detail in a minute. They have a sales presence in 15 different countries worldwide and currently 35 different states. They've got an award-winning edibles kitchen, over 90,000 square feet of cultivation capacity, and the ability to add an additional 100,000 plus square feet if needed. A very healthy gross margin of 29.5%, 3 dispensary licenses, 135 dispensaries currently in operation with Tilt branded products in-house, adjusted Ebitda margin of 10.7%. They've won multiple different product awards, currently just under 300 employees, so the company size is definitely continuing to grow. And finally, the all-important cash flow number in the bottom right here, just under $17 million positive cash flow from operations in F 2020. Now keep in mind, all of these numbers are in US dollars, which makes them that much more impressive. So next up, I wanted to double click on the plant touching assets. Now we mentioned they currently operate in 3 different markets in the United States, and those markets are Pennsylvania, Massachusetts, and recently Ohio. We're going to look at the Ohio entry in a second here in terms of their actual press release, which came out last month. But I wanted to take a second and draw your attention to 3 of the main numbers they call out in these markets. So population, the 3 states mentioned here actually represent just over 31 million people, which is almost equivalent to all of Canada. So although this company does have limited operations in Canada, they have major US exposure and the ability to scale that exposure and get additional presence in more and more states as they see fit. So that's extremely encouraging. Now the sales opportunity or total addressable market in these 3 states as of 2020 was just under $1.9 billion. So combined, it actually came into $1.87 billion. Now, if we look forward to 2025 estimated sales, that number all of a sudden jumps up to $3.23 billion. So the growth in these markets is absolutely fantastic, and it really puts Tilt Holdings in a strong position to continue their growth moving forward. Now, the bottom 2 points here talk about the licensing and supply in these states. Now, all 3 of them have a very restricted or limited licensing structure. And what that actually does is put extreme pressure on the supply side of things, which creates this imbalance between supply and demand. So you can see in all 3 states, there's a high imbalance. And that's phenomenal for an investor of this company because it means they're able to charge a premium for these products, whether it's the actual flower or some of the 2.0 or 3.0 derivatives. Now, we have seen a lot of change in recent months in the United States in terms of legalization. So this imbalance could shift over the next few years. But currently, they're in a very lucrative spot in terms of supply and demand. Now, this is the article that actually talks about Tilt's entrance into the Ohio market. This came out on March 16th, and they've actually branded it under Standard Farms. So this is going to be Standard Farms, Ohio. And what this is a 9,600 square foot processing and CO2 extraction facility. So if you just watched my recent video on valence, you'll know that CO2 extraction is the most common and most versatile in the MJ space. and really allows you to hit a lot of different product categories in terms of final output. Now this facility is located just outside of Cleveland, so great location, and it's ready to serve the state's 52 pre-existing dispensaries. So Tilt is planning to put out a number of different products from this location, including tinctures, vape cartridges, syringes, topicals, and expanding into concentrates and edibles. So they're actually going to leverage their award-winning formulas and operations in Massachusetts and Pennsylvania and try and emulate that here in Ohio. Now I will mention Ohio currently has only legalized MJ for medical use, but they currently have over 160,000 registered medical patients. They've seen that number double in the past year, and sales have actually approached nearly $280 million in this state, which is a 290% increase over sales in 2019. So although this state is only medical at this point in time, the sales volume and the traction they're seeing here is phenomenal. And again, once that legislation changes and it goes to full recreational, I expect those numbers to go up exponentially. So on the topic of TAM, total addressable market or market opportunity, I thought this slide was really interesting, and it's really relevant to a lot of the companies that I talk about here. So Tilt's actually forecasting legal MJ sales by 2025 to be about $35 billion. And if you compare that to craft beer, which a lot of times in my head, I think these industries will ultimately look and feel very similar, it's really encouraging considering craft beer is coming in at under $30 billion. Now, in terms of legal MJ sales in 2020, those came in at about $16 billion, which is pretty much on par with prescription pain medication in the United States. It then goes down the chain from there. So they call out some industries like NBA, toothpaste even coming in at $3 billion. But the interesting thing here, you guys, is this compound annual growth rate from 2020 to 2025 of just under 20%. And this is really encouraging and why I'm so bullish on MJ overall. I hold a number of these companies, and ultimately I think there's going to be more than enough share to go around and see a lot of these small cap companies turn into multi-billion-dollar market cap operations over the next couple of years. Now, this is the article that we were talking about at the start of the presentation here. This came out on April 15th, and this is the full Tilt year-end and Q4 financial results. So we've already talked about a lot of these numbers, the adjusted Ebitda, the cash from operating activities, the MJ revenue increase, and the expense reduction. But there's a few numbers in here that we haven't talked about yet that I really wanted to call your attention to. So number one, they issued revenue guidance for all of 2021, and that came in between $205 and $210 million. They also gave adjusted Ebitda guidance of 30 to 32 million for the company. Now, I've seen on some of the message and forum boards that a lot of people are criticizing these numbers, and they're saying that growth year over year is not looking so hot. And if you look down at the Q4 numbers, essentially what these people are doing is they're saying, okay, Tilt generated $42.3 million of revenue in Q4. If you were to annualize that out for 2021, you'd be looking at about $170 million. Now, if you compare that to the 205 figure that they gave for revenue guidance, it's a difference of $36 million, which works out to about 20% revenue growth year over year using those annualized Q4 results. Now, 20% growth is nothing to scoff at, but for some people that doesn't look very exciting in the MJ space. Now, I personally feel like Mark Scatterday is a smart guy, and I think he's kind of sandbagging these numbers. These 2021 estimates, in my opinion, are very conservative, and I think Mark's playing it safe and setting the company up to deliver some big beats. Obviously, the pandemic is a continuing wild card for a lot of companies that operate in the retail space, and I think Mark's really trying to set up a game they can win in 2021 here. So I would be surprised if revenue did come in at 205 to 210, and I could see that number being much higher in 2021. Now, the next point I wanted to talk about on here was actually cash and cash equivalents at the end of the year for this company. So they currently have 7.4 million of cash in US dollars on their balance sheet, which is a $3.1 million increase from the previous quarter. And they attribute that to the cash flow from operations. And this is exactly what we were talking about a few slides ago when we said the company now has the ability to internally or organically fund their growth moving forward. So things like the Ohio acquisition and entering new states, they no longer need to go out and raise external money to do that kind of stuff. And they can actually start financing these ideas without without diluting shareholders any further. So that's extremely exciting, and again, the most important part of this entire presentation for me as an investor. They then go on to call out some of the operational highlights for the quarter and subsequent to quarter end. So Jupiter Research or Jupiter power supply revenue, so vape power cartridges, actually doubled from Q3 to Q4. Standard Farms posted record revenue for the quarter, which included 2 of the highest individual months in company history. They also doubled their extraction processing capacity during Q4. On the Commonwealth side of things, they increased their kitchen capacity by 100%, along with their approved cultivation expansion, which took place or was planted in Q4. And the company completed the sale or divestiture of Blackbird. So for those of you who are unfamiliar, Blackbird was a retail software component of this company, and it really helped retailers manage their products and interact with customers in a more efficient way. Now that being said, this was a very competitive space, and this business unit really wasn't driving much revenue or profit for Tilt Holdings overall. So I think it was great they were able to get rid of this asset, get some money for it, and focus on areas of opportunity that are a lot more lucrative. They then go on to call out some operational highlights that happened after quarter end. So they closed Standard Farms Ohio, which we talked about. Jupiter saw record cartridge shipments in both January and record orders in February, so very encouraging data moving forward. Jupiter also received their medical device certification for their vaporizer technology, so again, opening up new opportunities for that division. Tilt launched Her Highness NYC branded products in Massachusetts. So this is one of these manufacturing agreements with another MJ company, but what was so interesting and compelling here is they were actually able to get products to market within 30 days of signing the manufacturing and distribution agreement or contract. So that shows their speed to market and their agility when they do enter these new partnerships, which is really exciting and encouraging as a shareholder. They planted 8 additional grow rooms in the Massachusetts location, and Standard Farms had its highest flower sales during the month of March. So again, shifting that revenue from purely vape or Jupiter base to flower and other areas of the MJ industry. So those of you who follow my channel closely probably recognize this chart. What this is an internal comparison table that I've built that actually allows me to compare companies in a similar industry using consistent metrics. So what I've done here is actually loaded in 6 of the top companies in the MJ space that I use to benchmark against each other. I've put in their current share price in US dollar, along with market cap, their quarterly revenue, annual revenue where available, along with quarterly adjusted Ebitda, and again, annual adjusted Ebitda where available. Now, sales in green are actually calculated, so for companies that haven't put out full year results yet, or they're in maybe Q1 of 2021 already, I've actually annualized their revenue and adjusted Ebitda based on the most recent quarterly results. And what you can do here is start to stack the companies against each other in terms of market cap to revenue and market cap to adjusted Ebitda. And what you'll see here is Tilt is miles ahead of the competition in both categories. So if we look at market cap to revenue, Tilt's trading just over a ratio of 1 versus Canopy, which is over 20 times, Afria at 8, and even Valens, which is currently my largest holding in all of my accounts combined, is trading at a multiple of 4.6 in terms of market cap to revenue. And this shows me that Tilt is a very attractive investment in terms of this metric, and it's very undervalued compared to some of its peers. Now, if we look over at market cap to Ebitda, you can see Tilt comes in at 9.5 versus Cresco Labs, which I also hold, that came in just under 22, and Afria, which is at 104. Now, all the other companies, Tilray, Canopy, and Valens, actually have negative market cap to Ebitda ratios because they've posted negative adjusted Ebitda in their most recent filing. So this table won't give you absolute values or price targets for these stocks, but what it really allows me to do is rank them from most attractive to least in terms of return on investment as an investor or potential investor in these companies. And I would really encourage you guys to do this regardless of the industry that you're looking at. It gives you a short list in terms of companies that you want to do additional due diligence on, and it really helps you identify companies that stand out in terms of being under or overvalued. And in this situation, Canopy really stands out to me as one that's very overvalued at current levels. And that's why For a lot of you who hold Fire or Supreme shares, I've been recommending you sell those positions rather than taking or converting over to Canopy shares, because I personally feel like they're extremely overvalued and you're better off investing in some of these small cap players. So to finish out the video here, you guys, I thought this slide was very fitting. This talks about some of the highlights in terms of Tilt as an investment opportunity. They're a unique multi-state and international operator, which is focused on business-to-business transactions. They've got turnkey plant-touching assets, which they can scale in fast-growing markets. They're the backbone of the inhalation or vaporizer industry in North America. They're able to now internally fund growth through their positive cash flow and adjusted Ebitda profile. And fifth, and probably most importantly, what that allows them to do is expand in multiple markets across North America. Now, I'm very confident that US legalization will happen within the next 6 to 12 months. I think this is going to give Tilt time to gradually ramp up their operations in more and more states. And I feel like it's very likely this company could reach a multi-billion-dollar market cap in the next 2 to 3 years. So for those reasons, you guys, I'm very confident and comfortable with my position in Tilt Holdings. I'm actually looking to continue to add shares of this company over the coming months, especially if the share price continues to stay in this range. I would definitely encourage you to take a closer look at this company if you're looking to get exposure into the small cap MJ space, especially in the United States, because it really does offer value that I haven't seen in any other company that I've recently reviewed. Now, if you haven't already, please take a second to smash that like button. It really does help the channel grow and get this content to other people who might find value like yourself. If you don't already subscribe to the channel, please take a second to do so. Let me know in the comment section if you currently hold Tilt shares and what you think of this analysis or company in comparison to some of the others in this industry. And as always, you guys, have a great rest of your day.